Arend, is this a time to be buying risk assets, or should investors be taking a little bit more of a cautious stance around risk generally?
Oh boy, that's a tricky one. Look, it's very unclear. We've been hit with a succession of shocks the last couple of days, right? So that's elevated uncertainty. If you sort of try to measure what the level of fear is right now, so we think we have a fear meter at UBS. So we've gone from not measuring anything sort of mid-July to now being sort of in the middle of the range over the last 18 months. So volatility's gone up. So it's made the environment a little bit more uncertain, people a little bit more cautious. Now, having said that, the question is sort of what's next. And so one thing that's next is we have in Europe, we have a major easing coming from the ECB. There's still an expectation that they'll be able to surprise on the upside, so people don't necessarily want to get too short ahead of that. We have the constant tweets, which basically pull us back from the cliff, so people don't want to get too negative. So I think it's very, very tricky to sort of decide, how cautious you want to be here.
Arend, what does euro do with the assumed easing of the ECB? What's the House UBS call on the vector of the euro?
So it does very little in the following sense. So the rate differentials haven't been that relevant for explaining euro-dollar over the last sort of 12 months or so. And so what's really driving the euro is sort of relative global growth differentials. And so as long as we stay in this bottom quintile of global growth, which is pretty much where we are right now, we're in the 25th lowest percentile over the last 20 years.
Well said.
That's a strong dollar. That's a strong dollar environment. And so what the ECB is doing is basically trying to counteract a negative counterfactual. So we've been hit with a shock. They're providing easing to neutralize it. It's not something that's going to accelerate the euro. It's preventing a slowdown. And so we think euro-dollar is actually going to go a little bit lower. So we have a 109 end-of-year forecast.
Okay.
Obviously not miles below where we are, but the easing from the ECB is not going to do that much.